I'm James Twomey, and welcome to the Twomey Stock Market Report. Today is December 15th, 2022, on a Thursday. Well. What a market. All I can say is that we've really seen probably the start of the year end, and we did not anticipate it to be a sell-off, but based on what we're seeing now, there's going to be trouble ahead. So let's dive right into it. I want to look at the market update, positions in the downdraft today, against some of our technical indicators. Maybe we can determine what's next. So let's see if we can pull that off, and we'll go right to our tables. Let's first look at our SPY, which we use the market trend analysis, right? On a technical basis, on the daily chart, today was down quite a bit, right? And stochastics that were going positive down here in the first quadrant now have gone back to negative, and then of course the green cross below the red. MACD definitely staying negative, and it's heading towards zero. Not a real strong sign of support there. If we look at the daily chart, Fibonacci from the last low to the recent high, we're almost coming to 0.382. Will that act as resistance? Hard to say, because look, we have our 50 EMA. Technically, it broke through that, and that foretells that we're going to have lower lows. What's very interesting on our short-term uptrend here, we've finally broken that uptrend line, and then if we look at our year-to-date, this overhead red line, we're just getting back into that downward trend, but we're definitely in it. One other thing of note that we haven't technically received a sell signal. We're getting near that once again, like we did 3 days ago, and we survived that. So there is a chance, some of our stops hit today, obviously, but more importantly, if tomorrow continues, then we're going to certainly get into a sell signal, and we'd have to exit, what's left of our position. We break our positions up into thirds. We get in our buy signal back here, right? And then as we eclipse, we raise our stops. So now we've tightened our stops, and the first third kicked off, second third kicked off, and we hold the last third until we get the sell signal. And the diamonds, which is our proxy for the Dow Jones, which has been the stronger of the two indices, same picture. Stochastics blew up on us today. MACD is heading down towards negative, but it's still in positive territory, but the green is below the red. But that's indicating the downward slope is continuing, and we're losing the breadth of the market. Less upside, more downside. And of course, today's downdraft, 780 points or so, is indicative of that. And again, that we had a new uptrend forming. This is the second one that started, and it's broken that. Now we're starting a third uptrend. And then are we back into our overall downtrend line for the year? This is our purple line. We're pretty close. Now, I'm going to pull that back a little bit, go back to a closer view on our daily chart. Here's what's interesting. We saw I use EMA, exponential moving average, more weight on the recent than the past. Some people will use a simple moving average. That's fine. But overall here, what we're seeing is that, if you see where my cursor is, we've got that crossed up last week or so, and that indicated a golden cross, which means once the 50 gets over the 200, generally foretells a more positive bias in the market. We really haven't gotten that. We went sideways, and the moving averages haven't eclipsed like the exponential moving average, so that may be why. But this usually gives a signal to technical indicators to start buying versus selling. So it's interesting that we've received these selling signals. Now, this, unlike the SPY, has not gotten to the 50 EMA, and it hasn't gotten to the 200. And as far as the Fibonacci from the last lows to the most recent highs, hasn't even hit 0.382. So again, remains the strongest indices, but it is foretelling that selling could be ahead. The reason why we're nervous, if you will, and we want to start, if we do get that confirmed sell signal tomorrow, we'll exit and we'll come back and fight another day. If we see every high, this is the weekly chart now. So 2022, every high had a low. The next high, a lower low. Next high, a lower low. Next high, a lower low. So we eclipsed that last high. We broke that last high. So in the world of technical theory, we shouldn't necessarily come back and hit that lower low again. But what you're going to hear and what we're going to be watchful for is this next phase of excess selling. It could be a capitulation situation and a drive down till the end of the year to the next lows. If it rebounds, great, we can always get back in, but if it doesn't, we want to protect our capital. So that's where that's going. So you want to be, tomorrow, get negative 300, 400 by noontime. Sell what you have. No sense hanging around. Our 4 tenets of recession is still remaining. We talked about these before. I won't go over them again. But the PMI below 50 was the last leg, recent leg that dropped. We are manufacturers contracting. That has really gotten a lot of people's attention, and that may be the reason by the selling. I mean, we knew the Fed was going to go up, so that's no surprise. The Fed was still going to be fairly hawkish and saying no. Inflation's here to stay for a little while. We're going to have to fight it. Look, if the Fed wants to get to 2% and we're at 7%, we're not going to wake up January 1st or February, after the February rate increase and say, oh, we're at 2%. If we are, something cataclysmic happened to the economy. We have way too much stimulus being thrown into the economy. That stimulus is keeping employment up. If employment starts to tail off, we're definitely going to go into that final capitulation sell-off, and then we're going to be dragging for well into midpoint of next year. But I'm not in the prediction business. Let's see where it goes. If we look at our sector table, where the money's flowing, the last several days, the last week, utilities, healthcare, consumer staples leading. We look at the 1 month, right? They're all leading. What does that tell you? It's telling you that everybody's moved their money into defensive postures till the end of the year. Anybody who's had profits to protect their funds and the way it looks, they're going to sell it. And like today, it just perpetuated more selling, and that's going to continue. So what we're looking at is all defensive sectors is where the money's flowing. No surprise, and even they were down today. And what we're going to see is between now and the year end, lighter and lighter volume. And if there's going to be a quick sell-off the next day, there's no sense us hanging around, and we'll get out and we'll come back and fight another day. What's very interesting is we're still long the TLT, which is the 20-year Treasury, and that has continued. We'll go on back onto the daily. That has continued its uptrend. Yeah, today we had some pullback. We're nowhere, the stochastic still way above 75, 83. We've got the MACD. Yeah, the green's starting to come down towards the red, but it's way up in 2.3. RSI is abated a little bit, and that's at 64. Still kind of nearing oversold, overbought, but we're way ahead of all our technical indicators. We're still long that. We've enjoyed that ride for a while. We went up to the 0.68, got repelled. Now we're trying to get another shot at it. What that's telling you is the economy's slowing down. I feel the interest yields on bonds are not going to be going up, because if yields go up on bonds, that means you have to pay more money for people to buy your bonds. So the interest rate on the bond is higher, right? That's what they mean by yields going up. The fact that the market is saying yields should be coming down, meaning lesser. If you're going to buy a $100 bond, we're going to give you 2% instead of 3%. Those aren't actual numbers, but since it's going down, that's telling us the economy's slowing. Its economy's slowing. The Fed is not having to most likely pay higher interest rates on money that's being borrowed, because people will go to the protection of the full faith government and buy bonds even at lower rates to protect their money, because the stock market's not a safe bet. That's what that's telling us. The other interesting today we noticed, and we'll look at U.S. oil. That went up the last couple of days. Shouldn't. If there's and it did hit the upper trend line, and now it's backing off. We do not have a buy signal, by the way, on this. We did have a mouse hunt buy signal, but I didn't issue that buy signal. But with that said, what does that mean? It means that if, we'll see where this goes. It should come down if inflation is abating. And if inflation's abating because yields are coming down, well, let's go down, and the dollar's coming down, commodities should not be in favor. In other words, demand will be less for these oil because the economy is slowing down. Infrastructure will not need it. So that's foretelling some interesting. Yeah, we had some downdraft eventually today, but we haven't, we need to see that back off. If it doesn't, that means the tighter oil demand. Now we've got that's a double head of the dragon, right? Inflation and commodity of oil prices going up. That's really that's going to tell you it's going to be tough sledding for the first half of next year. So more to come. Right now, the mantra is you want to get your prices. If tomorrow you wake up, it's down 300, and by noontime it's hasn't moved back to neutral. There's no sense hanging around over the weekend because we don't know what Monday is going to bring. More, go to TwomeyStocks.com. That's the number 2, MEStocks.com. There you'll get our weekly report, 20 pages of detailed information. It's all there on the website. In addition, it looks at fundamentals of the market. It looks at the technical aspects of the market. And we talk a lot about, what's coming up and how to position yourself for trading, correct? We also have the trade tracker where we show you our trades. You could sign up for alerts where we'll send you those real time. And then, you can take action as soon as you get those in your email. That's pretty much a simple way to do your trading, right? If you're an active trader, you might as well have somebody help you and guide you along the way. I'm James Twomey. This is the Twomey Stock Market Report. Go to the number 2, MEStocks.com for more information. Have a great day tomorrow and enjoy your weekend.